One of the biggest pieces of news that has been circulating the markets over the past couple weeks is the fact that Tesla is finally being added to the S&P 500. Now, if this is the first time that you are hearing this news, which I highly doubt, then you have missed out on over 35% gains since the news was announced on November the 16th after market close. But don't have FOMO, don't feel like you missed out on an opportunity. If you stay tuned to the end of the video, I'm going to share with you a potential buying opportunity, a way to take advantage of Tesla being added to the S&P 500. Nick here from Ways of Wealth. Thank you for tuning in. It's week 49 of the market recap. If this is your first time here, we highlight key events that happened in the market over the past week. But before we get into the video, I'd like to ask you a huge favor. If you learned something new, if you get some value out of this video, smash the like button. It definitely helps my channel out. We are going for a goal of 45 likes on this video. So if you could help me get there, I would appreciate your support. And don't forget, hit that subscribe button, turn that notification bell on. We do this every single week. It was only a few months ago that Tesla was snubbed from being added to the S&P 500, although it had met all the criteria back in September. This criteria consists of 4 different general areas. The first one is the market cap has to be greater than $8.2 billion. The second one is that the headquarters must be in the US. The third is that 10% of the outstanding shares must be available to the public. And the fourth is probably the most controversial. This one revolves around profitability and earnings. So you need a positive earnings report in your latest quarter, but then also in the 4 previous quarters before that, the sum of all of them have to be positive as well. The reason this is so highly debated is because Tesla achieves profitability by selling what are essentially environmental credits. These are issued by the government and sold to companies that do not produce electric cars. This allows them to avoid big fines by the government. But that is neither here nor there. Tesla is being added to the S&P 500 and there's nothing we can do about it. Due to the massive size of Tesla, many Wall Street managers were asking that the S&P split the addition over 2 days. This is due to the magnitude, the massive size of Tesla's market cap. The last company that we saw of this magnitude being added into the index was Warren Buffett's Berkshire Hathaway back in 2010. It at the time had a $198 billion market cap. It's now $542 billion. To put this into context, Tesla closed out the week with a $567 billion market cap. The S&P 500 is a market cap weighted index, meaning the larger the market cap the company has in the index, the larger percentage it takes up within. So to put this into context, if Tesla was added over this weekend, it would actually sit number 7 on the list. It would fall behind companies like Apple, Microsoft, Amazon, Facebook, and Google. Now, why does this matter? Due to this S&P 500 reallocation, then that means all of the ETFs that passively track the S&P 500 will have to change as well. The roughly $4.6 trillion that are in these ETFs will have to be shuffled around in order to mimic the S&P as of close on December the 18th, so everything can be in order when Tesla is added on Monday, December the 21st. Many analysts are predicting that $50 billion of Tesla will have to be bought by these ETFs on the Friday, hence why many of these Wall Street managers were asking for it to be split over a 2-day period. So that's it. All this time to tell me to buy Tesla? I knew that. Well, although Berkshire did outperform the S&P by 18% for the month and a half after it was added to the S&P, my play is not Tesla. I'm looking for something that's a little bit less volatile, something with a little bit less risk. And the moment you have all been waiting for. If you're not familiar with how an ETF works, I'll start quickly by trying to explain how an S&P 500 index works. You buy into shares of this ETF and they own the underlying securities. And they've owned the underlying securities in the portfolio as a percentage of market cap, which means there will be heavy rebalancing when it comes to December the 18th. These ETF providers do not have $50 billion waiting around on the sidelines waiting to buy the allocation of Tesla on that day. And this begs the question, where is this cash going to come from? In reality, this cash is going to come from selling and rebalancing the current portfolio to match and mimic what the S&P is going to look like after Tesla is added. And we know that based on the numbers today, that Tesla will make up about 1 to 1.5% of the S&P 500. So that means they're going to have to sell those larger position names, those larger percent of the S&P 500, the ones that we listed before in this video. What this essentially means is that there's going to be selling pressure on those names. If you think about it, because Tesla's market cap is so big, it's going to take away from the percentage allocation of these bigger companies of how much they take in the index. So this means these ETFs that mimic will have to sell these bigger name companies in order to make room, generate cash to buy Tesla. So your names like Apple, Amazon, Microsoft, Google, Facebook, these companies will be oversold on the Friday. And these ETF providers, because they want to mimic what the S&P is doing, do not care what price it is selling at. So you'll get a oversold pressure potentially after close on Friday, December the 18th. To throw another wrench into things, December 18th also happens to be Quadruple Witching Day. Now, if you're not familiar with what this is, I did touch on it in a video before. So I'll throw it above and I'll put a link down in the description. So check that out if you want to learn a little bit more about that. But that's essentially when stock options and futures contracts are all ending on the same day. So it could lead up to something that is very vicious with tons of market volatility. Now, this video is my own personal ideas and not to be considered as financial advice, but I definitely suggest that you do some more research on this topic and see if you see the same things that I do. Let me know down in the comments if you agree with what I'm thinking. That's all for this week in the market recap. I hope you enjoyed the video. Again, I ask you a huge favor. If you learned something new, if you got some value out of this video, smash the like button. It definitely helps my channel out. Don't forget, hit that subscribe button, turn that notification bell on. We do this every single Sunday. I hope you all have a great week on the markets. Happy trading.